We'll have to see what happens on Friday. We're getting CPI inflation report on Thursday. So a lot of data this week. Jobs report didn't move the needle that much. There was a lot of conflicting information in the jobs report. Most of the jobs were in healthcare and construction. There was a loss of jobs earlier, but that was due to some of the Doge layoffs. So there's that. Unemployment ticked higher. One of the other things that I saw in the jobs report, overall, this time last year, there was 2 million less jobs. So even though the unemployment is higher, there's more people participating in the workforce. So 2 million more people have jobs today than they had this time last year. So that's something. Retail report didn't show much. Markets initially didn't like it. Another thing that you start to see with inflation, some of it has to do with immigration. The thing that what's helping with immigration, two major aspects of the result of a secure border. Number one is in the labor market, when there's less people competing for jobs, their wages can go up. Wages can go up because you don't have this, when 40 people want the same job, you don't have to offer as much. But when all of a sudden there's less people and you want to get a quality person, you might have to offer more because there's less people vying for the jobs. So, when you flood the labor market, it has a tendency to dilute wages. So what we're seeing in the last 8 to 12 months of this administration is wages are steadily climbing higher because as a result of the illegal migration into the country has been thwarted, has been stopped. That's one thing that happens. The other thing that is a true metric of inflation in the economy is rent. So rent will come down quite a bit in 2026. And I believe it has come down already quite a bit because of the immigration policy, recent immigration policy. There's less of a chance for landlords to jack up the rent and ask, for higher and higher rents because you have less people putting in applications to rent. So it really drives rent prices through the roof when you have an influx of immigration, because now landlords realize there's so many people that need places that they start jacking up the rent. And when that number decreases, the rent increases slow down. In fact, it's stable. It's a huge rent stabilization point. This is why Mandami in New York, the new mayor there, is so full of shit. He talks about rent's too high, rent's too high. But he's all for no borders. He says, bring them into New York. He doesn't really want them in because he knows it'll kill his numbers. But his narrative is migrants are good, illegal, legal, undocumented, doesn't matter. Let's bring them in. We're welcoming everyone into New York City. Bring in as many migrants as you can. We'll take care of them. But then he complains that rents are too high and that it's because landlords are bad and are capitalist and there should be rent control. Well, the way to get control under rent, Mandami, is to stop importing millions of illegals into your state and into your city. That's one way to stabilize rents. Also, the increase in demand for food, services, products drives inflation through the roof in New York City. So direct correlation of illegal immigration and some of these metrics in inflation. And I think you're already starting to see it in the numbers. That, however, is not moving the market. So what's interesting about the Fed is so tight. The Fed feels like as soon as they see that there are a lot of jobs being added, he panics and says, oh, we're not going to rate cut. We got to keep inflation down. It's way too tight of a policy. And that's been my criticism of the Fed for the last couple of years is not only has he been a political tool of politics, although that is redundant, what I just said, grammatically redundant, but that he's just too tight. He feels like if he lowers interest rates, it'll flood the market with capital, and that somehow is a bad thing and will push inflation through the roof, and that the tariffs that Trump was going to put on would exacerbate the problem. He's been wrong on both accounts. So inflation is coming down, prices are coming down, rents are coming down because of better immigration policy, energy is coming down because of better energy policy, and that energy and gas prices and fuel prices coming down also brings the cost of goods and services down because it's cheaper to deliver when your energy prices are lower. It's all kind of a big effect here. So what will the Fed do? Don't know, but CPI on Thursday just might be another card to read and see what will the Fed do. Will there be another rate cut in January? Powell's still going to be around, so we'll see. Back to the markets, energy taken quite a dump. I think a lot of this has to do with some inside scoop that Ukraine and Russia might be closer and closer to a peace agreement. If that happens, it changes the oil flow, energy flow. So gas and oil going to go lower. Oil prices will be lower and lower. And if there's no war going on between Ukraine and Russia, so you're seeing oil take quite a drop. Dollar continuing to go lower. Let's take a look at all the metals here. So you can see gold kind of flattening out the last few days, even though the dollar is going lower. If you look at the gold miners, pulling back a little bit, even though I think this is temporary in terms of what gold is doing. This might be a good place to add. I will consider today or tomorrow possibly adding to metals, even though you're seeing a pullback here. I love this pullback in gold. As you've seen, these are absolutely healthy and necessary for gold, even though you'll see this, right? Dollar continues to go lower. This pullback in gold might be actually a great place for us to get some more of it for the next leg higher into January, but probably won't make that move today. Maybe we'll wait one more day, but it's something that I'm looking at. Let's take a look at silver. Silver, I think, is the big winner in the future. Might see some pullbacks, but if you're inclined to buy any hard asset, I'd be buying some silver. Stick it in your closet. SLV, great investment. GLD, even better. You can buy some hard assets, or you could pick up GLD, SLV. I think for long-term portfolio, in my opinion, at least what I have for my own, I'm trying to work my way up to about 15%. Still not there, but I'm slowly buying more and more of it. And that's a combination of the hard asset, bars, and stock, of which the stock I want 2/3, 1/3. That's kind of the way I do it. 15% of total portfolio is in metals, of that amount, 2/3 of it, maybe a little less, stock, and 1/3 of it is in gold bars, silver bars, palladium, etc. That's just what I'm doing. I'm not giving anybody financial advice because I am not qualified or legally allowed to give you financial advice.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.